Hi everybody, welcome back to the channel. Hope you're all doing well. We're back on the StockSmarty platform, and today we're going to be looking at 5 AI-focused ETFs, AIQ, CHAT, BOTZ, ARTY, and ROBT. If you're not familiar with the StockSmarty platform, I'll link a video above where I explain the platform, how to use it, how to rebalance, etc. And please review it and get yourself up to date with the platform. So we're going to run them through the tool and see where the holding overlap lies, where the real consensus is, find out which stocks all the AI funds agree on. So if you're thinking about building a more AI focused portfolio, then this will give you a data driven starting point for your own research. Just a quick note that this is not financial advice, it's just for education, so always do your homework. But right, let's get into it. So as I said, we'll start with AIQ, CHAT, BOTZ, ARTY, and ROBT. Okay, so we picked our ETFs. We're going to go to the settings. We're going to set whether we want a minimum dividend yield, but I don't want any yield. I want to see all the stocks in the portfolio within the top 50. So I'm going to remove that setting. Again, I want to do the analysis on all the top 50 stocks within that portfolio. Investment amount is mainly for indicative purposes, but we're assuming we're investing £10,000, and we'll click Analyze now. So hopefully after a few seconds, the platform should return the results for these 5 ETFs, and we can get the consensus and the understanding as to where the overlap lies and what stocks you potentially may consider investing in if you want to focus on AI. So we've got our results. So we've got the quick summary card at the top. So there's 49 stocks within the portfolio, and these would be stocks which met our threshold or minimum criteria, which would have been appears in at least 2 out of the 5 ETFs, and also meets the dividend threshold. And of course we haven't set one to 0, then obviously it will turn everything that's in 2 or more ETFs. If you wanted to filter out by a stock that only met a certain criteria of dividends, then obviously you could set that in the previous screen. However, as we can see, that the dividend paying stocks within the AI sectors is very low. I mean, the average dividend yield here is 0.5%, which is extremely low. So we found 169 stocks in total, but only 49 qualified for our portfolio. The rest will be sitting in our backup, which again, if you haven't seen the previous video about how the stocks are analysed and categorised, then please watch that. And we've got 120 of our backup stocks. Again, the 120 plus the 49 brings you back to the 169, which is the total number of individual stocks within these 5 portfolios. This just gives you information about the annual dividend. So if you invested £10,000, you get £50 a year, because obviously it's extremely low dividend yield. We've got information here about sectors, etc. And if we look at the sector breakdown, as expected, 72% are in the information technology category. So let's see what those stocks are. So we've got the portfolio allocation results in this table, so we can see how many out of the 5 ETFs we're now analysing, how many times did NVIDIA appear in those ETFs. So 4 out of the 5 ETFs had NVIDIA. We've got the dividend percentage of that particular stock. So as we said, we didn't set a threshold because we want to see everything, but if we set a dividend threshold of 1, then NVIDIA wouldn't appear in this summary results table. We've got a score, which is a StockSmarty score, which is based on the frequency that it appears in an ETF and the weighting, so how much is invested in a particular ETF. And obviously the more it appears and the heavier weighting it gets in terms of funding allocation, the higher the score. So what we can also do is click on our information button, and we can get a little bit more information about the stock, in particular NVIDIA. So we've got our dividend safety score at the top. We've got information around consecutive dividend growth. We've got the PE ratio, market cap, BOTZ, etc. And finally our StockSmarty score. So you can dive into each of the stocks, find out a little bit more information about each, and you can tailor your portfolio. So for example, we've got ADM here. So we consider it quite weak. It's very expensive at the moment according to its PE ratio, and the beta is obviously very high. So you may decide that you don't want to have this in your portfolio should you want to save this portfolio, so you can remove it or remove a selection of them. So just going through some of the results, so we've got the usual suspects in the AI space, AI race. We've got NVIDIA, Microtechnologies, Advanced Micro Devices, SK Hynix, which I believe is quite a big South Korean semiconductor company, and the list goes on. So you can see if you wanted to have a portfolio which focused predominantly on the companies that are investing in AI or that are leading the AI race, you may decide to save a portfolio similar to this. And as before, say you only wanted a portfolio with only 40 stocks in it, you could delete the last 9, come up here, remove those stocks, and the fund allocation rebalances. So the fund allocation will always add up to 100% because it has to, and because we deleted those stocks, the amount allocated to NVIDIA has gone up and the others would be adjusted accordingly. So what we can also do is run the AI analysis. And what this does, it gives us a summary of the portfolio. So again, how many stocks are in the portfolio. As you can see here, it's identified as built for AI themed stocks. Dividend ratio being particularly low. The sustainability of this is obviously it's a very high risk volatile portfolio. It goes into more information around that, including sector concentration and graphical exposure. So in here, 75% of the stocks are in North America. Again, the risk profile and then individual holdings over the top 25. So it gives you a quick breakdown of what they look like, the allocation, and a quick high-level summary of each, and then finally a summary at the end. So if I was on the StockSmarty platform and I wanted to save this, I could obviously save my portfolio, give it a name. So we can say AI ETFs, save that portfolio. And what this does, it takes us back to our portfolio page, which has all the other portfolios that we have in our particular account. So again, we can have a look, go into our view. This is the original. We can look at the stocks. We can go down and see the stocks we've chosen, the price we saved them at against the current price, which gives us an indication if we come back to this portfolio in a week or a month's time, we can see how that's grown over time. And then we see the individual stocks, and again, even now you can click into any individual stock and see the scores card. So what I'd then do is come back after a couple of weeks or a couple of months, and I would rebalance my account. And then I've got a whole other video about me recently rebalancing my main account, which you can check, and I'll link to that above. And then we repeat the process of rebalancing as and when you'd like. So again, we can go to our forecast tab. We can see some or do some simulations around what that may look like over time. So in this case, I just saved my AI ETF portfolio. It's the original. I've only got one. I could do some simulations. If I start at £10,000, I invest £500 a month over 20 years, and I reinvest any dividends. I can set the growth rate here. So again, typically the S&P 500 is about 7 and a bit percent. Most people think it's 10, but that's when it reinvests dividends. However, AI, you could assume a higher percentage, and you can just see how that grows over time and how your equity curve grows with that over time as well. Again, we have blogs. Please read the blogs. They are quite useful. We'd love to get your feedback. And again, if there's anything missing that you'd want further explanations on, please suggest them in the comments below. So that's it. We've got our new AI ETF portfolio. We'll monitor that over time. Please come check out the StockSmarty platform. It's totally free to sign up and to try. And you can keep the free plan for as long as you'd like. Some of the more advanced features are in the paid plans, but again, you're not obliged to sign up for those. You can just try the free account for as long as you like, and in that you get initially the free analysis and the free rebalances, and then after that you still get one rebalance and one analysis a month thereafter. So please check it out, sign up. If you have anything specific in the comments you want us to look into, please do. And for all else, happy trading, and hope to see you in the next video.